Hey guys, how's it going? Welcome back to the midweek market update. First one for a little while, whilst we've been getting the course pretty much finalized. Obviously, as I was speaking to you guys on the call on Monday, we're pretty much there now with where I wanted it to get to for kind of that more, general launch out to the public. So yeah, we'll slowly be ramping these up now with a bit more consistency. Back to our usual schedule. So this kind of update, it will be a little bit short and sweet, just kind of covering euro dollar, mainly focusing on the higher time frames, kind of going all the way down to the 15 minute. But obviously, as I haven't been actively trading the last few days, I'm not going to go through every little bit of price action, but we'll slowly start to build those out now. As we go on over into next week. So let's actually take a look on the real high time frames, because we haven't had a look at this for a while now. Forex.com, although I do prefer this data feed kind of compared to the other main ones, kind of major downside for the real high time frames is the data feed doesn't go back that far, but it's not really massively important. But we can see that, I would argue we're still overall in a long-term bearish trend, definitely from a kind of quarterly perspective as well, right? That is the general direction. And that for me is the last kind of real major break in structure. We did come down here, but we failed to close below those lows, at least from a monthly perspective. It was a sweep of that liquidity, and we did get that minor break of structure to the upside. But what did price do? Well, if we take a look at this leg here, yes, we did come above the swing high. Actually, and this is kind of the issue, right? When you don't have enough data, trying to go back to actually map where all your highs are, we're going to have to work with that being the swing low, that being the swing high. Which is, it's not ideal, because then in that case, that's the break of structure, and this would be a high, which would mean therefore, right, the premium's not to the whole way up, which isn't great. I'll tell you what we can do actually. Let's have a look at IDC. That'll probably give us the best. Okay. Right, yeah, so even then, that probably would be my low at that point. So, okay, we can run with that. Forex.com. So yeah, let's say roughly this was the low, then technically that was the swing high, and we are actually trading within this super long-term monthly bearish range. But what did price pull back up to? Because for me, that's only a minor break of structure, sort of more of a change of character, and we can see that we reacted to these buy to sell wicks on the monthly time frame. Now, are these buy to sell wicks? Do I even have a month? Here we go. Are they just, is it just a standard structure zone, or is it potentially a little bit more than that? Well, we clearly have this area of demand, kind of this last minor area of demand before the major low just got broken there. So we do technically have a flip zone, which price then tapped into. We then got another minor break of structure to the downside, kind of in line with the overall larger bearish trend at that point. And then we pull back up into this that new created area of supply here, which we then tapped into towards the start of the year, where it's taken a little while, but obviously it's the monthly chart. It's going to take a few months for it to turn around. But it now looks like we're starting to see that supply starting to hold, especially as we've now taken out this minor low here. Have we got that monthly close below? Let's see. Yes, we have, very clearly. I'll zoom in. We now kind of have that minor break of structure back to the downside on the monthly chart. So there is, argument to be said that we're going to take out this low at the very least, because it's failed to take out this kind of high here. With the a decent argument that we could be coming down to take out these lows here. Kind of the only argument I have against that is that we did, we swept those lows, we broke structure to the upside, we created demand here. Price has then held that demand, so potentially we could come back down and hold this level here. So it'll kind of be interesting to see what battle we get, but I think for the remaining of the year, it's looking like we're going to kind of be stuck within this range here. And we'll see which way we can go. But from a structural perspective, this for me is a weak low because it failed to take out this high here. And these are weak lows as well, because kind of really failed to take out those kind of more major swing highs up there. But from a demand perspective, so kind of ignoring structure, we can see this level of demand holding. So it'll be interesting to see now if this demand is going to hold, and we're just going to get stuck kind of between that supply and this demand. So, but from a structural perspective, these lows for me are technically quite weak. So now that we've got a break of this low here, we can look potentially for price and then come back in, kind of get that confirmation entry on the monthly chart, and then potentially we could come in a little bit lower there. Heading down to the weekly chart, we can kind of see those refined monthly zones down to those weekly zones, right, where price came up into here, and we got that weekly change of character, taking out that minor low, pull back up into that next area of supply. So we can see supply starting to hold. Demand is now starting to fail, right, because we had this area of demand, fell to put in a higher high, and we had this real shitty level of demand, right? It didn't really achieve anything other than kind of wicking that very minor high there. Price paused a little bit, swept up liquidity, but then it failed to take out that daily high, which we'll take a look at in a second. And now we've finally broken down, and importantly, we have closed below that weekly low there. So for me personally, the weekly is now confirmed bearish, and we are playing within this range here. So I will be looking for price to start to come down lower. Just remember, this is the way that I define trend changes for me. As soon as I get that lower low, that swing lower low, I'm happy to just call the trend being confirmed bearish. But kind of the more classical way of defining trends is that you need, well, let's say for a bearish trend change, is that you need both a lower low and a lower high. And remember, for a lower high to be confirmed, so if we were to pull back to form that lower high, right, over here, for this lower high to be confirmed, what do we need? We need another lower low, right? We need a break of structure to confirm that that is the lower high. So that means for those people, right, who view the trend in kind of that more classical definition, for them to have a confirmed trend change, they would need to see a double break of structure because they need a lower low and a lower high, which requires that first boss and that second boss. Okay, so the reason why they would like a bit more confirmation, I guess you could argue, is because this could technically just be a sweep of liquidity, right? And then we could, do whatever and continue up from here. And then actually it would turn out that this was just one kind of big leg up and this was just a minor pullback, right? And that's kind of why you can wait for that little bit of extra confirmation. I prefer to try and keep my trading a little bit more simple than that. And now that we've taken out, for me, it's a decent enough of a pullback on the weekly chart to count that as my swing low. We've now closed below it, so I see us as now bearish, and I'll be looking at kind of any of these sort of POIs, kind of like that one, right? We've got obviously the extreme up here, and potentially some more sort of aggressive ones down here as well to look for those lower highs to form and see if we can come down lower. In terms of weekly targets, probably the nearest kind of area we have, it's not very, very clean in terms of refining it to a specific candle. We do have this inside bar here that you could refine to. Obviously that would depend on your rules if you need it to be a candle that was engulfed, because technically we didn't close in the next candle, or you can be a little bit more loose and kind of just look at this larger sort of weekly range here and wait for price to come into it, which to be fair, I'm kind of happy to do that and then refine that down on the daily, the 4 hour and potentially lower. And arguably this is a flip zone as well, right? If we take this fractal wick, which swept liquidity, and then we got a break of structure down here, right? So that's a decent supply zone. Price came in and then flipped. So for me, that is a very decent supply to demand flip there on the weekly chart. So that's kind of a very rough area that I'll be looking at for price to eventually make its way down. We do have these buy to sell wicks here as well, but that'll probably be a little bit clearer on the daily chart if we take a look. But remember, old demand zones, when we're in a bearish trend, they should in theory just be reaction points to facilitate pullbacks in order to generate liquidity, right, for then price to target for the next lower low. So any longs from up here, sorry, from down here should technically, at least from a weekly perspective, you're just playing that weekly pullback, right, for then eventually that pro trend lower high. So let's have a look at the daily chart. So obviously, pretty much since about the summer, since June, we've been in that very clear bearish trend, right? We started to take out these lows down here, and then we had swings pretty much like this. Now, this section of price action was a little bit tricky in terms of whether you define that as a daily high or not, but as we can see, judging on the kind of the size of the previous price action, you can always use that as a rough guide to help you as well with defining your swings. And you can see here, that was just a minor pullback. That was just, a bit of liquidity for price to sweep and then get that true break of structure, right? So that was the swing high. That was the swing low. That was a minor high that price swept to then come down and break that next low. And then here, I just get rid of all that drawings. I zoom in. It was the same thing essentially, right? We can see that was the true swing leg down. This was just a minor pullback to provide liquidity for price to then sweep. It failed to close above that high, right? That was the swing high, and then we got that movement down. So we have a bit more of a clearer bearish trend down here, and now we eventually have come down and taken out those large double lows that were left. Had a very, very minor pullback and continued down. So for me, that's the daily high. Still looking for somewhere for that daily low to obviously form. We're kind of, where did we react at the end of last week? There are sell to buy wicks here. It's nothing really that clean or that great, that I'm really that too interested in. For me, the next kind of real key area on the daily chart is this range here, or you could refine it to obviously the bearish candle, or potentially, you could even be looking at this sell to buy wicks here, which technically was kind of the last bit of price action you can see on the daily candles that broke this supply zone here. So potentially we may get a reaction from there first. I've kind of just got a rough hour on those wicks, but I've just drawn it to here. So I will, as soon as kind of price comes into that wick there, I will be starting to look for, the M15 starting to switch bullish and potentially look to play those daily pullbacks, right? If we get that, otherwise we have the larger weekly range here, which we can start to refine to these candles a little bit nearer the time when price potentially eventually reaches there. So yeah, in terms of daily levels, we've got the obvious ones. I'm not going to draw them on the chart at this time. I would rather focus on the lower time frames for that. But yeah, we can see very, very clearly bearish on the daily chart, a hell of a lot of momentum. We have now broken a major weekly level, so we have to remember at some point there is going to be that large weekly pullback, which will give us a decent move. But it doesn't always just happen the very minute that we get that break of structure. We could fall a fair way before we actually get that pullback initiated. So remember, for a weekly pullback to commence, what is our best signal that it's likely that pullback is starting? What is our best signal that weekly run is over and that weekly pullback is started, right? It's going to be a change of character on the daily time frame. So at the moment we haven't got that. So what I'll be looking for essentially is if we get the daily chart coming into, say, this level, let's say this demand level holds, and then we get that daily change of character, we just get a tiny sort of minor break of a high. That for me would be a daily chalk, right? And then that would be not a guarantee, but a decent signal, right? If we're coming off demand, we get that daily change of character, that now we are, forming that lower low and we're ready to commence that weekly pullback, right? So that would be something I'll be keeping an eye out on. Going down to the 4-hour chart, again, we can see very, very clearly bearish, super nice trending price action here. And at the moment we are pausing in this 4-hour area of demand, pretty much hit the EQ there. Scroll across and we can show have a look at these areas. So for me, this, I'm not going to go all the way back, I don't know, to 2018 or whatever to try and find out if it was a flip or not. I'm not overly bothered. It's not the most amazing of levels. You can see it was really mitigated as well. So yeah, not really expecting this level to give us an amazing reaction of a pullback. But yeah, we can see, especially if the M15 starts to switch bullish, we have had a change of character, which we'll take a look at in a minute. But really, I'm keeping the trading very simple at this point, right? Looking for those lower highs, just can keep trading this until we get that change of character, and then we can start to look to play that daily pullback play. And then obviously, then if we get that daily change of character, then we can start to play the weekly pullback plays, right? So just one step at a time. First, I'm going to be looking for those M15 changes of character in those higher time frame areas of demand to look to play 4-hour pullbacks. Then if we get a 4-hour bullish trend change or a decent 4-hour change of character, then we can look to play the daily pullback, right? And if we get that, that larger daily change of character, then we can look to play the weekly pullback. Okay, so just kind of pair your time frames up like that. Look for on each time frame, are we getting those changes of characters or not? And then that can allow you to set your expectations of how far a bullish play is likely to go. But obviously those bearish moves, those are the ones you're going to want to try and hold for a decent amount of time and distance. So yeah, when we come down, don't know why these have jumped all across into that nearest daily range that I've drawn on. These are kind of the 3 4-hour zones I've kind of refined that daily zone towards, which yeah, that first one really not my favorite at all. It's a very clean push, not much inducement in the leg. However, let's see, did it? No. So ideally I would have really wanted what I would have wanted to see for it to be a sweep zone is for this low to have been taken. It took the range of these inside bars, which, arguably you could argue that did take liquidity because it took the range, the lower time frame range, right, of those inside bars. It swept those lows. But for me, really, I want to see this low get swept for it to be a true sweep zone, just like how this one did here and this one did here. So you can see these ones, right? It tries to make that move up. It comes down, takes all of the sell stops that would have built up below that low, and then the move starts to go, okay? Same as this one, right? Move goes up, liquidity below that low, sweeps up liquidity, and then the move goes. But I'm more than happy to kind of keep my eye out on all of these 4 zones. If we start to get some decent lower time frame confirmations, but obviously these 2 zones I'm gonna definitely prefer for looking for trades from when price, even when price gets down to there. So for the rest of the kind of the week, for the next few days, really just focusing on potentially playing some counter trend longs up into here, but obviously the high probability positions, if you want to be more patient, is to wait for that pro trend 4-hour lower high. looking for kind of these three main zones that I've got. Inside bar at the extreme, kind of this inside bar range here, which technically is a flip zone, right? Because we had this 4 hour zone here, price came in, reacted, reaction failed. We also got the break of structure, so that's a pretty decent zone here to be looking for shorts. And then we also have these buy to sell wicks. It's kind of the nearest real 4 hour zone, which arguably is also a flip zone. The decisional zone, I guess, that caused the failure of this demand zone here, right? So that's the last bit of supply that came in to then break that low there. I think that's pretty much all I wanted to cover there on the 4 hour time frame. That's not supposed to be shown. That's a 15-minute range. I'm just going to get rid of that there if you were confused as to why I had it drawn kind of randomly there on the 4 hour range. 4 hour EQ, of course, would be something a bit more like this. Oops. From the high to the current low that we have. And I'll just drag that out of the way to keep it nice and clean. So let's take a look at the 15-minute time frame. So actually, just one other thing I forgot to mention was the 4 hour here, right? We had this pullback to these buy to sell wicks, and this is kind of why I'll always keep an eye out on these kind of, these levels. They don't look like anything amazing, right? But if you can see it in the 4 hour chart, then it's probably going to be a decent 15-minute level. Now, technically, if I look at this candle where the wicks are, the low, if you look on the top left of the screen, the low is 402 of that candle, and then the high here of this candle when we pull back up is 401. So at least with this data feed, I technically missed that zone by 1 micropip. I'm personally happy to call that and just view it as, yes, it did technically touch, because for the sake of a micropip, the data, just across the data feed, it could be spreads or whatever. I'm pretty much happy to say that that is what it reacted to, and that is then what led to the break of that low. So in theory, right, this swing high should be protected now, and we should not break up above this high for when we pull back to form that bearish lower high. Within that buy to sell, that 4 hour buy to sell wick that we just looked at, we had a much cleaner M15 pivot zone, which if I take a look, I believe actually was, whoops, didn't mean to do that. I believe it was a 15 flip zone. Let's put on a support level here and see what it reacted to. Scroll across. Maybe not. Don't know if this was the one I was thinking of. Will the data even load for me? No, it's not going to load. Okay. Anyway, we have that pivot candle there, right? Nothing amazing, but we can see what do we get? We got that M15 change of character, confirming that the level is going to hold. Then we pull back up into supply, and then that led to the eventual break of that 4 hour low there around sort of the New York session timing there. And then we had this kind of last point of demand, right, in that leg up. Price then came down into this level. So at this point, this was, my swing high. That would be my swing low. Just move this out of the way. So you kind of have this level of demand at the EQ. Price then reacts and breaks down, and then we do get that break of structure, and then we pull back up around to the EQ around the end of New York, and that is what we end up rejecting, that flip zone, and then we break down again. And this for me is the M15 range that we are currently playing within, right? From reacting from that 4 hour demand zone, what do we now have? We have our M15 change of character, right? It's an inside bar, which means it didn't break that low, right? So that means that is now a high, because, right, move down, pull back up, break of the low. So that means that we now have, that's the kind of last minor high I have. Price has now spiked that. I'm happy to just have a wick break for changes of character personally. So that's why I'm not too surprised now. What have we done? I'm down into this origin zone, and this is where you can start to look for those long plays. So this is kind of how simple I approach the markets. I kind of try to lay that out in the new course, especially if you've just looked at the structure lessons. You guys will see this. This is kind of the very basic model I use of just trying to keep it mechanical and patient. When you want to start to play those counter trend pullbacks, we're coming into a higher time frame area of demand. This is the most aggressive way, but it's kind of the bare minimum really I'd want to see, is waiting for that M15 change of character, right? Pull back into demand. You can obviously see the sweeps liquidity here, and now it's looking like we may potentially, especially if we get another break of this high here, right? You can start to look to play those pullbacks plays up into areas of supply, right? We have this most recent one here, but ideally we can see if price will pull back a little bit higher into Thursday or Friday to then look for those shorts. The only thing I'll say is I believe NFP is this Friday. And often you just see kind of price chopping around before we go into the news event, right? Just generating liquidity. So we may see some choppy pullbacks and chop around here for a little while, and then you'll probably see a big spike of it and then a run on lows or something like that going into Friday. So do keep an eye on that. Obviously, all of these are still valid POIs, but they're just not the most high probability in the world. But if you're happy to be that kind of more aggressive approach intraday, you can obviously wait for price to come into here, wait for your entry models to set up, and then trade them. Just have to manage your expectations. That price may now be starting to kick in with that minor bullish order flow right on the M15. If it starts to keep breaking minor highs, coming into new levels of demand, just to facilitate that deeper pullback into kind of these POIs over here, right? And then eventually, once we get that change of character again, then what's happened is you have tons of liquidity that's built up, right? All of that trendline liquidity with all of those mitigated zones, all of that demand has been mitigated and filled. So then when price is ready to go down, there's no demand left to support price, and that's when we see those aggressive moves down, okay? Just like essentially we had here. It's not the best example in the world, but imagine it on the 4-hour chart, right? It's starting to get mitigation, come up, mitigate, right? We fail, we change character, and now there's no demand left because all of the demand here has been mitigated, and that's why we then melt down through the floor there. So yeah, that's pretty much it. We're coming to that higher time frame level of demand. Simply just looking to play longs if you want to play the 4-hour pullback, but the best position is going to start to be to look for that 4-hour lower high to then run that low, potentially all the way down and towards that daily zone around 145 there, one spot 145. Yeah, you can see the M15 zones that I've got on here. Some of them are just they look initially like pivot candles, but there's actually quite a few flip zones here if you go and look at what they reacted to, okay? So we have that as a flip zone there. I've just deleted it to try and keep my charts a little bit more clear and minimal, but that's a valid flip zone. Then we have this one as well up here. Right, I like that. That's a decent sweep zone. Price came in, reacted and pushed down. Then we also have a couple of zones here as well. Alright, it's more of a minor area of demand, this one, because it took out this minor high here, and obviously that minor high there as well. Price came in, reacted, so technically that's a flip zone. Price came in here, and that's the decisional flip zone. So we have this one and this one for here. Yeah, and then these ones aren't so clear, but they are within that kind of nicer 4-hour inside bar level. So lots and lots of areas to look for potential lower highs to form coming into the end of next week. But if you're more than happy to kind of play those M15 longs from these levels as well, you can start to play that back up and towards the EQ, but obviously just be a little bit more aggressive with your management. I did have a very quick look this afternoon. They potentially may have been looking at an area like this. Now this is not really the type of area. It's not great to be looking for shorts, right? Because since, well, where was the London Open? It was around somewhere around here, right? The day pretty much starts with the M15 low getting taken, and then it just melted and melted and melted and melted. So really the kind of way you could have traded that sort of move is if you're happy to be aggressive and just chase all of the M1 continuations, right? Until we mitigate a higher time frame area of demand, and then we get that M15 change of character, and then you can stop, right? But yeah, looking for shorts down here obviously can play out, but as you've just come into a 4-hour area of demand, you're shorting really low in the leg. It's not going to be ideal, okay? Yes, you're trading with all the momentum, but you kind of have to ask yourself, is it still high probability to be doing that, so low down, especially when we're coming into a 4-hour area of level of demand? But it definitely, it is valid. So what I'm kind of talking about is this M15 bullish candle, price coming in. Let's see. So price comes into the zone, M1 swings still stay bullish, right? Then we break the high here. Stays bullish, then we break the high again, right? So we're starting to sweep all of this liquidity that's building around the London lull going into New York Open, and then what do we have? An area of demand here on the M1. I'm going to zoom right in. There we go. You can get it to work for me. M1. So we have the reaction, right, and then we have the failed reaction. However, as you can see, this trade ended up being a loss, whether you took the whole range or whether you took the refined inside bar, right? That would have been a loser there. So yeah, I think that trade from an M1 perspective, in terms of the right, we have the sweep of liquidity here, right? For me, that's a pretty decent sweep of liquidity. We then have the flip, we have the change of character, right? When we took out the lows down here, whether you took there or there, both decent M1 levels. However, it ends up being a loser. The only thing that this entry model didn't have, purely just from an M1 price action standpoint, is the flip zone itself didn't take liquidity, at least on the M1, okay? So the price was swept, right? If you count these as highs, price did sweep that, and that's the sweep of liquidity. But I'm talking about the actual flip zone itself, right? So if you'd expect price to come into this demand zone down here, what you'd expect sometimes is price comes up, it reacts, it comes down, then it sweeps liquidity behind this high here, and then we go, and then essentially that sweep that took the liquidity within the reaction, that becomes your sweep zone within the flip, if that makes sense. There's a lot of keywords I'm trying to fit in all in one sentence there, but that is this here, right? Hopefully I am making myself clear, is this bit here, right? That's the general M1 sweep into the zone, but then you're also looking for the actual flip zone that you're entering on to be a sweep as well, right? This bit here. And in this case, on the M1, we didn't get that. It's simply just a flip, a push down, a pretty clean leg, right? It's reasonably clean, not that much inducement in the leg. So arguably, from an M1 perspective, that's what could be better if you were looking for more confluence within the M1 entry model. But really what it comes down to is not so much the entry, it comes down to the area you're trading, right? Yes, it's pro trend, there's a lot of momentum, but you're selling very, very low in the leg after pretty much an entire day of selling and coming from a 4-hour area of demand. So not the worst trade in the world if you took a loss. I mean, you can see here what ends up happening afterwards is these pretty much perfect equals got taken, mitigated this kind of larger M15 range here. And then we came down into this area of demand. Let's see, there was an entry, kind of last area of demand there. So that's your reaction. So those buy to sell wicks, not the cleanest at all. But if you were quick, once you saw that reaction go and we get the change of character down there, that could have been a potential entry. If you were happy to short from here and look in this general area, that would have been another re-entry there. But even that, right, you're basically paying the 15-second level. No obvious sweep zone there. Yeah, not the best trade in the world just because I don't like the level that we're trading from, but kind of just wanted to cover those if you were looking at that today. But yeah, not the best trades there in the world. So kind of focusing again on the higher time frames. Higher time frames are very clear for me at the moment. We're obviously in a pretty strong bearish trend. Don't want to be fighting that too much. And to be fair, although we've had a decent M15 change of character, I don't really rate this 4-hour zone. It's kind of in the middle of nowhere. It had already been mitigated with this move here. It's not a sweep zone. Potentially it's a flip zone, but I don't feel I need to go back all the way. Look, I'd really kind of be pretty confident in price once it comes down to these levels. But of course, you don't need to wait for that, especially if we kind of start to get multiple breaks of structure to the upside on the M15. Going into London or New York tomorrow. But these are kind of the main areas I'll be looking at for shorts to try and short this back down in towards that daily level there. And that pretty much wraps it up. Just keep an eye on these zones and see how we set up throughout Asia going into London tomorrow. So hope you guys have a good end to the week and you are smashing your way through the rest of the course content, and there's a lot for you guys to get into. Remember, it's not a race. Take your time, literally go back to basics, watch the structure lessons again and again as many times as you need to. Keep practicing, collect as much data just on one pair alone, something I'd always advise, right? If you're trying to get the hang of structure again, don't be afraid to really just nail those basics and slowly build layer upon layer from there. And as always, if you guys want me to check over any of your charts or anything, feel free to chuck them in Slack or send me a DM. And I will see you guys on the weekend for the next weekly breakdown. So have a good end to the week. Be careful with NFP, and I'll see you in a few days. Cheers, guys.